A may be an individual, B may be an individual, C, who is a partner in a firm, is an individual, D, who is the director of a company, is an individual, L, who is a lecturer of a college, is an individual, S is a cricket player, is an individual. So, as already told, individuals are human beings. So, every human being is an individual for the purpose of taxation under the Income Tax Act. Number 2 is HUF. HUF is a short form of Hindu undivided family. See, joint family system is prevalent in India. That system has been abolished in Kerala, but in other parts of India, joint family system is still prevalent. A joint Hindu family consists of all persons lineally descended from a common ancestor and includes their wives and daughters. I will repeat, all persons lineally descended from a common ancestor and includes their wives and daughters. Lineal descendants are called co-parceners who have right to claim partition by birth. Only a member who has the right to claim partition in the family property by birth is called a co-parcener. It is not partner, parcener. COPARCENER, co-parcener. A co-parcener may be a male or female. Earlier, female members were not treated as co-parceners, but later the position has been changed. Now both male and female may be co-parceners in a Hindu family. The income derived by the joint family is taxable in the hands of the HUF and not in the hands of the members. That position will continue until a finding a partition is given by the assessing officer under section 171 of the Income Tax Act. There are two schools of Hindu law. One is Dayabhaga system and number 2 is Midakshara system. Under Dayabhaga system of Hindu family, the eldest member of the family is the Karta or manager of the family, and their sons do not have right to partition. Under Dayabhaga, only the eldest member of the family is treated as the manager of the family, and sons do not have right to partition. On the death of the eldest member, the surviving eldest member will become the Karta or manager of the family. But under Midakshara system of joint family, HUF consists of all persons who are lineal descendants from a common ancestor and includes their wives and unmarried daughters. I have already told you that members who have a right to partition in the joint co-parcenary property by birth are called co-parceners. Therefore, The term co-partners include father, sons, grandsons, and great-grandsons in the 4th degree from father. Female members other than daughters in the family. A daughter is a co-partner. Other than female members, other than daughters in the family. That means mother, daughter-in-law, etc. They are members, they are not co-partners. They will be co-partners in the family in which they have born. As the joint family system has been abolished in Kerala, it is not treated as an assessable entity in Kerala. But in other parts of India, this joint family system is still in vogue, and therefore it is a taxable entity. As Income Tax Act is applicable to the whole of India, we have to study about Hindu undivided family, or in short HUF also. Now, the third kind of person is company. Company. Section 2, subsection 17 of the Income Tax Act defines a company as, number 1, an Indian company, a body corporate incorporated under the laws of a foreign country, that is a foreign company, any institution, association or body which is declared to be a company by general or special order by the Central Board of Direct Taxes, CBDT. For purpose of taxation, company is classified into Indian company, foreign company, domestic company, public or substantially interested company, infrastructure company, etc. We can say ABC Limited is a company, XYZ Private Limited is a company, LIC is a company, KMML is a company, etc. And Indian company means a company formed and registered under the Companies Act 2013 and includes a company formed and registered under any law relating to companies formerly in force in any part of India, a corporation established under a central or state act, any institution, association or body declared by the Central Board of Direct Taxes to be a company formed and registered under any law in force in Jammu and Kashmir or in the Union Territories of Dadra, Nagar, Haveli, Daman, Diu, Pondicherry and State of Goa. In all these cases, there is a condition that the registered office of the company should be in India. We have seen that Indian company means a company formed and registered under the Companies Act 2013 and includes a company formed and registered under any law relating to companies formerly in force in any part of India. See, before enacting the Companies Act 2013, we had another company law called the Companies Act 1956. That act has been repealed and a new Companies Act has been enacted in 2013, and that is called the Companies Act 2013. And domestic company means an Indian company is a domestic company. Any other company which has made prescribed arrangements for the declaration and payment of dividends in India is a domestic company. A company of which the share register of the shareholders is maintained in India is a domestic company. A company whose annual general meetings are held in India is a domestic company. When shares are declared, the payment of the dividend is made in India, then that is also a domestic company. Thus, we can see that Indian company is always a domestic company. Now, the next category of person is a firm. A partnership firm, we can say. Section 4 of the Indian Partnership Act 1932 says the word firm is the collective name given to a partnership. Because a partnership is defined in that act as relation between persons who have agreed to share the profits of a business carried on by all or any of them acting for all. The persons who have entered into the partnerships are individually called partners and collectively called a firm. With effect from 1st April 2010, the term firm also includes an LLP, that is Limited Liability Partnership as per the LLP Act 2008. We can say XY and Sons is a partnership. A and Company is a partnership. It's all firms. So that is the definition of firm. Is the fourth category of persons under the Income Tax Act. Now, there is another category, an association of persons or body of individuals. Actually, there are two categories of persons, but in the Income Tax Act, they are defined jointly. Actually, no definition is given in the Income Tax Act. Regarding AOP or BOA. AOP means association of persons, body, BOA means body of individual. But in the case of Commissioner of Income Tax versus Indira Balakrishnan, the Supreme Court of India says two or more persons joining in a common purpose or common action with an object to produce income, profits or gains, and not merely to receive income jointly, can be called an association of persons. Thus, every combination of persons is not an AOP for the purpose of the Income Tax Act. It is only those associations who join together with a common objective of carrying on an income-producing activity. As the name indicates, association of persons, AOP may consist of individuals, HUF, AOP, company, partnership firm, etc. Because association of persons, individual is a person, HUF is a person, firm is a person, company is a person. When it is association of person, we can say it includes all categories of persons defined in the Income Tax Act. An HUF may be a member of the AOP, Another AOP may be a member of the AOP. A partnership firm may be a member of the AOP. A company may be a member of the AOP. But a body of individuals include only natural person, that is individuals as the name indicate. We also already seen that AOP may comprise of individuals and non-individuals, whereas body of individuals will consist of individuals only. In the case of AOP, there is a common will and desire among the members for producing income or engage in income earning activity. In the case of body of individuals, there is such common will, and generally it is made by operation of law. When there is a dispute among family members and when they approach the court will give certain directions to the members. Those members of the family can be called a body of individuals, and they have to carry out the directions of the court. Similarly, A, an individual, B, a firm, C, a company may join together to conduct an exhibition and to share the profits therefrom. It is an association of persons. Local authority, the next category of person. Local authority means an authority having governmental functions. Panchayat, municipality, corporation, township, etc. are local authorities. Section 3, subsection 31 of the General Classes Act defines a local authority to mean a municipal committee, district board, body of port commissioners or other authority legally entitled to be entrusted by the government with the control and management of a municipal or local fund. So local governments are called local authorities. That is why we can say such authorities are exercising governmental functions, and such authorities may be a panchayat, municipality, corporation, etc. Now, the last category of person is artificial juridical person. Artificial. It is not a natural person. We assign a personality to that particular person. That is why they are called artificial juridical person, because legally they will be treated as a person. So it is not a natural person, it is artificial. They have the quality of a person, legal, that is why juridical person. Is the residuary classification of the term person. It does not include persons enumerated in the other 6 categories we have already seen. It covers only artificial persons with juridical personality. For example, let us take Guruvayur Devasam is an artificial juridical person. Bar Council is a juridical person, artificial juridical person, like that. So it is not a natural person, but given a personality under law. That is why they are called artificial juridical person. So these are the 7 categories of persons defined in Section 231 of the Income Tax Act. This is only an inclusive definition, and therefore even other persons not included under the 7 categories may still be treated as persons for the purpose of taxation. Now, we have been discussing Section 4, under which total income of a person is brought to tax. So we have seen person, the definition of person. Total income, I have told you, the total amount of income computed under the income tax under various sections. Now, we have to go to another category called scope of total income. Total income I have already seen, the total amount of income computed under all the heads of income. I told you already that Section 14 of the Income Tax Act classifies income under 5 different heads. Now, what is the total income of a person? A person may have different sources of income. Yes, may be having salary income. At the same time, he may be doing a business, he has business income. He may own more than one property, one of which is let out and rental income is received. He may have bank deposit, he is receiving bank interest. He must have sold a property during the year and earned capital gains. So, the same individual may have, or the same person, maybe individual, firm, company, whatever it may be, income under different heads of income. The scope of the total income of a person is the income derived by that person under all these heads of income, and when it is aggregated, it becomes the total income. But still, scope of total income has a wider meaning. It depends upon the residential status of a person. Under the Income Tax Act, for the purpose of taxation, the persons are classified into resident or non-resident, and in the case of individual and HCF, resident and ordinarily resident but not ordinarily resident. We have to see this in detail, and it requires more time. We will discuss it in the next class. Thank you.